Okay, guys, so we are going to talk about DeFi at a conference called ETHMilan. We started everything, I think, years ago, where DeFi was almost everything that we were doing in Milan, and institutions came slowly but steadily, and now we are surrounded also at the conference. I will let the panelists now introduce themselves so you can all figure out why they are cool profiles to be able to talk about DeFi India.
I start? Okay. I'm Dan, co-founder of Rysk. Rysk is DeFi options protocol focusing on volatility strategies and structured product. We are currently live on HyperEVM, the #1 product on HyperEVM, options product by TVL. We had yesterday about 70 mil, today it's about 40 because Friday's option expiry and we sell all the positions. So it's like, you know, always an exciting day to see TVL going down 30 mil, but we'll make it back by next Friday, I guess. Yeah, that's pretty much.
Hi, I'm Connor, one of the co-founders of Enso. Been building crypto full-time for the last 10 years. Enso really is a DeFi middle layer that allows any application developer to easily, quickly integrate the on-chain protocols within our application. We've enabled over $11 billion so far. Our record was $3.1 billion for Chain in 3 days for the Boyko launch, and we have over 300 plus large B2B clients.
Nice. I've been working on Boyko as well. I remember you, bro. I'm Alberto, now with my real name this year. Basically, my past started in TradFi, then I moved in DeFi, building an option protocol like Dan that had been sold like 1.5 years ago. And recently I just joined Keyrock, which is like a digital investment firm with the aim of improving and increasing capital efficiency alongside like TradFi and DeFi. So we look at anything that is crypto related, so DeFi, to support traditional finance, to leverage it to increase capital efficiency and make like, you know, this transition towards this new world, especially now that everything is getting tokenized.
Hello, I'm Federico. I'm a bit of an outsider here, as I work for Bitfinex, a very much centralized exchange, and yeah, one of the oldest still alive since 2012. And yeah, I mean, I work mostly on the derivative side, but I also manage an internal research and development team that is working on some DeFi experiment on Bitcoin layer 2s. So yeah, looking forward to have a nice discussion.
And I'm DavideFi. Besides being a co-founder with Milan, I'm also the general manager at LFJ, previously called Trader Joe, a decentralized exchange on Avalanche, Arbitrum, and Monad. And today I would like to start with something that has been one of the topics I've heard the most over the past year, which is people say that traditional yield farming is over in DeFi, and DeFi has changed shape. What do you think has changed, and what's the direction now that is working, and why has it changed?
I can start a bit spicy. I mean, DeFi was meant to some degree replace the traditional financial industry, and it seems now that we're all bending over backwards to work with these types of people. So much so that the same 5,000 users that work in DeFi and are using these applications are just being cycled around from one app to the other. It's all the same kind of user set, right? So I think some people have getting rid of their cyberpunk ideologies or where they want this ecosystem to go because we need to get more users, right?
Got rid or had to give up?
To get rid or give up?
Yes.
I think sadly we've had to give it up. You know, even this conference, right? There's a lot of people in suits. A couple of years ago, you wouldn't have people in suits in crypto conferences, right? But I think the reality is we need more users, and we're going to need to enter that different part of the industry. So, you know, it's not food coins anymore, sadly, right? The good APY, you know, Avi, even the risk on Avi for, you know, putting your money there, getting 2.5%, I can put it in an off-chain fund for 12%. That has 4.6 billion AUM, will cover the losses. Whereas in DeFi, you know, the EF should have also stepped in, right? The community saved DeFi, essentially. But yeah, I see it changing quite a lot. Trying to start spicy, you know?
No, it totally makes sense to me. To be honest, it's a swift shift that is, as of today, needed. Coming from TradFi, I was fine to join DeFi to help them out to innovate the TradFi markets. Then when I joined DeFi, I was having this philosophical mission of DeFi gonna replace TradFi. It was fine until I just discovered that then DeFi and most of the crypto people was focusing on things that were having not real, let me say, market fit and not real adoption. So we said, like, why don't we start building something that at least institutional are using it and are leveraging out for increase their capital efficiency I was saying before, which is good. But I think that we are in a moment, in historical moment in which we need to drive the shift to help them out, crypto people, to not be scared or just move out, but just be more conscious of what the risk that they are taking, and that's why they need that specific yield rather than another. Because as of today, we are having one of the lowest yield on chain, which are lower than TradFi, but the risk is still higher compared to TradFi. Because and DeFi people is still perceiving that TradFi risk are higher than smart contract risk on certain protocols. So they are like, oh, why I should buy some credit from a fund, from a tokenized fund? It's risky because I don't have atomic redemption. So okay. Maybe this is a gap, it's another building block that we need to build to do this bridge properly. But still, credit risk, when you have behind the scene, an institutional company would drive due diligence, would make a rating. I mean, they know what they are doing. So yes, there is this kind of risk, but is somehow as predictable as smart contract risk, even if, or maybe sometimes even lower, because as we have seen so far, 3% yield, and then you got your funds got wrecked by some weird things happening on the smart contract side that you cannot control, and you cannot come back, which philosophically is super good for transparency. On the other side, is exposing us to new kind of risk we were not expecting.
Dan, you said so many times risk that I think you have to follow up.
Yeah, that's a good name, right? Like everyone is using your good branding. Maybe on this I do agree, but I also think that yield is not the product. I would say that we're not building DeFi for the yield. We're building DeFi for the infrastructure. We're building DeFi for certain, better products in terms of, transparency and all of that. The yield is a use case of that. But I would say that none of us has been building into this industry just because we were able to offer better yields. But we were building to build a better infrastructure with all the transparency, the global access, all of these benefits out of it. And the first use case that we figured it out, it was the yield. And obviously, when you think about DeFi summer and so on, because of a lot of tokens emissions and so on, the yield was good, was exciting, the risk reward was there, and it was probably one of the biggest acquisition out there. So I would say yes. But at the same time, if you talk to any DeFi project out here, it's I'm not building to offer a better yield. I'm building to make a product with a better infrastructure and so on. And even for risk, at the end of the game, you can see risk as a volatility structured product. Yield is what we offer, and it's also probably the innovation that we made into the space. But at the end of the game, we are there to build an infrastructure for volatility products. And again, the yield is the way we onboarded some of our users. But at the end of the game, it's not the mission, it's not the final reason why we're building. So this is kind of my take about yield farming. It's a use case. Right now, at the end of the game, yield is also a function of demand, right? Why the yield is so low right now? We can all argue that the yield is low, but it's purely based on demand. So why it's completely there are people that are probably assessing the risk reward. They're different from us. Maybe there is an oversupply. At the end of the game, that's how we should see yield as well. So there's not much we can do. It's we cannot wake up tomorrow morning and be oh, now the yield is 10x better. But as a builder, I can wake up and make a 10x better infrastructure, yes. So that's the kind of way I'm thinking about DeFi. We should not over-focus into yield, because then we lose the focus of why we're building this.
Yeah, the thing is DeFi should offer something that TradFi is not able to offer. So not just to have a better yield or just to compete on the financial metrics. And what you can offer is distribution towards a certain class of users that do not have easy access to TradFi, or better control on the collateral, so to avoid certain risk. Also, DeFi has a role to keep kind of the whole centralized size of the industry in check, because if people can migrate to a DeFi solution, he also pushed the decentralized venue to offer better guarantees on the collateral to avoid that something like FTX or MTGOX can happen again. But I think also on the product side, it shouldn't just replicate TradFi product in DeFi, because then the target user is a bit different. So you also need to adjust the product, and in a way it's already happening. I mean, like in DeFi, in general in crypto, perp is king, which is not the case in TradFi. So we already have some product differentiation from other markets, from TradFi market also. You see on the derivative side, while in TradFi the option market is dominant, in crypto is the opposite, is mostly the future, mostly the perp. So this shows that the audience, that the target user for DeFi is also a different preference. So also on the product side, shouldn't just replicate TradFi, but in a EVM smart contract, but also innovate and project like Rysk show that you can produce an innovative product that is not there in TradFi and have success, have distribution.
And does liquidity thinning, as retail users are not liquidity providing as much as in the past? Now there is probably an over-reliance on market makers to fill the gap that with the DeFi dream will then become decentralized distributed liquidity. So how is this relationship with DeFi and market makers looking like right now? And do you see it becoming more decentralized in the future, or are we heading towards a more dependent future?
Well, maybe, I think depends a little bit also how the ecosystem evolves, because we can have more decentralization of liquidity providing if there is more fragmentation of venues where people trade, rather than concentration, as you create more smaller opportunities that big guys don't care about because they're too small for them. So you can have smaller market makers that take on this opportunity, and so you can have more distribution of that. Well, if the market end up consolidating all around a few big venues, then they are more likely to be dominated by a few big liquidity providers that can have economy of scale and better latency and better infrastructure. So it's also a bit depends on how the taker flow decide to play into the market.
So if I may add, as a market maker, I think that TradFi is always working alongside market makers, which are the most important player there, more on the trading side rather than the liquidity side for sure. But in DeFi, market makers are jumping into liquidity provisioning and helping them out, the overall industry, because maybe as of today there are some hidden risks and things that are difficult to understand or hedge as a retailer, and market maker has the expertise to do that, for doing that, and it can help out like retailers to have like a smoother experience and more efficiency into the sector as a whole. In my personal opinion, maybe retailer in DeFi are like retailers in TradFi. There are two types of retailers, maybe. The super risk adverse one, we just buy like super simple stuff, super low yield, and that's it for him, just to park the money and avoid inflation. And then there is the one who is looking for asymmetric return. So for that kind of retailers, maybe having a market maker which improves efficiency, help them out to try to find a way to do these asymmetric returns on trading. On the liquidity side, maybe they are helped because they can have a layer on top of that and avoid some hidden risk inside that. The strategy that on liquidity provisioning that was unexpected. So for example, in 2022, most of the people were providing liquidity into pools on DEXs, which was convenient because you were getting a lot of incentives, you were getting like a lot of things, and everything was going up. So basically, we're not noticing that there was a risk into the liquidity provisioning, which was the impermanent loss. Once everyone got educated about the impermanent loss, they didn't try to leverage it up to hedge it and make money out of it. Things that maybe market maker were already able to do it, and they did it. While retailers just escaped from that and tried to find other sources of providing liquidity. Maybe they jumped from DEXs to lending protocol, just because it was easier for them to understand the payoff that they were taking. So in the end, I do believe that market makers are trying to help the ecosystem to grow up like on a more like secure way, let me say, to let retailers be safer when they are doing things on chain. So it's not a matter of we are like taking their role. We're just supporting them to have like something which is like more efficient as a whole industry.
Decentralized solvers, maybe a solution?
No, the more centralized the better, ironically. Completely agree with you. I think to go back like 5 steps, what do inherently users want? Simple experience, they want the fastest experience, and they want the best outcome, i.e. the highest amount of tokens. Does a user care if it's decentralized? Maybe we talk about it, but if a user's saying, hey, to buy 1 ETH, I'll give you 2K, but if it's decentralized, I'll only give you 1.9, they're obviously going to take the 2K, right? And like you were saying on the solvers, we were like one of the top solvers of intents. I think we were like top 3 in CowSwap, and we paused that. We actually found the more centralization you have, the better quotes you can give and more control. And also, for example, if you look at Relay, right? Like Relay, the cross-chain bridge, it's an EOA. It's a pure one address managing all of these funds. And users just want the best outcome, right? So I think if market makers are able to provide value to the users, make the experience very simple, I think it's all fair game. And I think these market makers are supporting this ecosystem a lot more than probably we even know, right? The market makers aren't going to publicly say we do this and this and this all the time. But if there's a flash crash, people that are keeping it alive are the market makers. So yeah, I actually think they're good for the ecosystem.
We can probably move on into what's a success in DeFi, actually. I would have liked to ask Dan what has seemed to be working as a driver of success for DeFi users. When people ask me if people still use DeFi, I actually point out at Rysk as one of the true use case of retail. Real people actually using a DeFi protocol and loving it. So what do you think is working out to have these DeFi users to be passionate about the product?
Yeah. Well, first of all, thanks for pointing out Rysk. That's probably one of the reasons it's working. It's like our users like it, and or refer others. So in the case of Rysk, I think we went pretty bold on a thesis, right? Our thesis, we started doing options a couple of years ago. Didn't work. I made a whole speech yesterday about it for 45 minutes, so I can talk about it forever. But it didn't work as a product. And the problem we had back then was that we were targeting traders, options traders, and the options traders were so sophisticated. They were looking for better spread and better product and market making and all of that. What we've done is we do actually believe in to make this accessible. And our thesis was, can we actually make the option in a way that they're accessible to anyone, not options traders, by focusing on a product which is simple to understand and tells you exactly what happens and when. So we redesigned everything in terms of UX and the interface, and we converted the product from one thing about options, they are so general that you can do anything. And what we've done is the opposite. We only let you do one thing with option, which is one strategy to generate income out of the asset that you hold. So the reason why I think it's working is definitely good product, and I'm bold to say that. But also the timing was good. And the thing about what we're doing is that you make, at the end of the game, you generate income out of volatility. The market right now is volatile. There are wars. There is Trump waking up and attacking countries. So there is volatility out there, and there is no yield from other sources. So our users are like, wait, this product I can get APR or income out of this product. It's real because it's coming from selling options, from selling volatility. So it's not based on rewards or something like that. It's easy to use. I know exactly what happens and when. And to give an example, a lot of our users, there were positions on covered call on hype, which means if the price of hype moon, you might sell cheaper potentially, which is not a deal. And that's exactly what happened this week. And not a single user complained, because it's on the user to decide what they've done. They have the power to choose. So again, back to your question, and to make it simple, it's I think we went very bold on a thesis to be like, DeFi should be accessible. We made that accessible. We offer a product that is based on real yield from a yield source that is volatility, and there is volatility in the market. So this is pretty much it. And a year ago, everyone was like, oh, options don't work. No one wants option. No one wants options in crypto. And we just basically decided to be, okay, I think it's different. It's not that people don't want options. It's that we are selling options as a product, and I'm selling you the benefit of it, which is income. So I think there is space in DeFi. And the other thing, and then I'm gonna stop about it. We also went on an ecosystem that was exciting for DeFi, which is Hyperliquid. I didn't want to say, but like Hyperliquid was definitely also a success because people, users were happy about the ecosystem. They wanted to invest into other new product into the ecosystem. Rysk was a new product. We got users out of it, so it was very good at the beginning when you need to bootstrap the first users. And Hyperliquid is a success case in DeFi right now. So, it's worth to mention that also, being at the right place at the right time with the right product, basically, that was the function.
May I do a spicy question to Dan? And do you think market maker impacted positively, or you would have preferred to go fully decentralized? So basically, because Hyperliquid is a successful case, but it's behind the scene, there are a lot of market makers like doing the order book.
Yeah, so the thing about Hyperliquid is, back to the market making, right? Actually, Hyperliquid is a very good example, in my opinion. They started with the HLP. So they were like, we're not going to onboard market makers now because, you're a new exchange and you need to pay market makers, blah, blah, blah. So they were like, we're going to build our own market makers and it's going to be decentralized, which was the HLP is doing, right? So you deposit, you get users. HLP helped them to bootstrap the initial liquidity, and it helped to make the market more competitive, because the problem with market makers is like, they are very short-term thinkers. If a market maker can make 1 cent today, it's going to make it. And it doesn't care about making zero tomorrow. Like, tomorrow is a new day, and tomorrow I'll figure out how to make the next 1 cent. So you cannot really build a product, in my opinion, just relying purely on market makers. So you need to figure out a way that you want them to compete, you want them to, integrate and so on. And that's what Hyperliquid, I think they've done properly. It was like the HLP was the market maker, and then it grew so much that other market makers wanted to get in. One thing that Hyperliquid they've done it, and I respect it, is like, actually the top market makers on Hyperliquid are not crypto market makers. They have a few market makers from TradFi that they figured out those guys have flow, those guys have very interesting volume, we integrate into that. And they basically stole some market share from crypto market makers. That I think that's also like a very good example on why the product got successful. In the case of Rysk, we had the same problem. Like, if market makers are short terms, they're gonna not always price the best, quite the opposite, especially if you have an RFQ system with an auction. Like, they tend to go down on the auction and not on the way up, right? So we built, for example, we just announced last week a system that we use the fees generated from the protocol to actually market make when the quotes are not competitive or there is not enough demand. So we basically reinvest in all the fees that the protocol is generating into make the market maker compete. The thing is, you don't want the market makers to be too relaxed. You want them to compete all the time. And that's what I learned from Hyperliquid, and that's what we're trying to do as well, similarly at Rysk. So you need market maker, especially when it comes to option, but you don't want to rely 100% on them.
Yeah, I think like the sad reality is that to bootstrap both in DeFi and also in DeFi, if you are bootstrapping a new project, you need to have a kind of your internal liquidity provided to bootstrap, because to solely rely on external market makers, then it's hard, because there's going to be a moment when maybe they all disappear because they are going somewhere else where it's more profitable, or they want to avoid like a moment of volatility. They want to provide their service maybe when the user needs it the most. So yeah, I think that the sad reality is to bootstrap, you need a little bit of internal market making. And then, like as you scale, then you can have external one that at that point they are competing between each other. So you don't need to pay crazy money in incentive to make them do their job.
And as today the market changed a lot. Also in how projects launched, as we are talking about this topic. 2020, 21, the DeFi summer and the bull run, every project had their token, and the token was the product. Today, most of the projects do not have a token. They're focusing on revenue generation. They might never add a token, and the token conversation has shifted for the majority of the surviving DeFi product and even CeFi product. They might not consider even anymore a token until the top of the next bull cycle. But besides this, where do you think we're heading around tokens? Is the future looking more tokenless than what we dreamed about?
No, I think this trend is great because I think the token is the product was a terrible model, because then if that is the product, that is also the focus of the team. So instead of actually trying to improve the real product and offer a good user experience, they only care about keeping up the price of the token. So I think it was very bad for the incentive of any project. So yeah, the fact that token model is dying, I think is great for the industry. And this seems to be the direction also, because yeah, like anyway the market is too fragmented to support many tokens. Yeah, you can have a few success stories like in the case of Hyperliquid, but there are very few of them in the past few years. So yeah, if we can have like people focusing on revenue rather than trying to create a million token, and then we will have as an industry we will have better products to offer to the end user, and as an industry we can all grow better. So I think yeah, the future should be tokenless, and it's a great thing.
Yeah, I agree that it's going to go more tokenless. I just don't think tokens are going to evaporate, right? I mean, like, for example, Enso, we've been around for 6 years. We only launched a token like 5 months ago. Most teams launch within the first 2 years. What I find is really interesting about this ecosystem, it would talk about revenue as if it's like a magical thing. That's like what any business should do. The incentives were wrongly designed from the beginning, right? You can get some sketchy founders, some VCs, launch a token, get it listed and just dump it, right? And we still see that going forward as of today. I do think there's a network effect of launching a token, right? For us was, hey, we wanted to expand to have more on-chain actions all within one place. We need an incentive mechanism and a coordination layer for that. And a token is really, really good for that. Traditional payment rails aren't able to function that particular way. So if you're using a token to expand the network, build more community and more awareness, I think it's extremely valuable. I think the memes, or let's say culture coins as such, I hope to fuck that they go, because it's just a waste, mind my language. But I think network effect tokens are incredibly valuable and will stay around.
Yeah, in my opinion, it was a natural shift, because in the end, like you build business and then you find a way to let others have access to the benefit of the business you created, which is what Enso did. They built infrastructure, they built like useful products, and then they launched the token. And I think this is also, I suppose, a risk finance strategy, that is you find out like product market fit is scaling up, and then it will come, which is like what every business does in TradFi. You build your company, you sell your shares to VC, private investors, you grow up, and then you list it on and do IPO and go to public, which is natural on one point of view for any kind of business, even though I'm not sure that we just need to consider token as securities, because the culture should stay a bit like alive in the ecosystem, which is part of the fun. So on one side is super needed, on the other side, this culture and fun is moving from DeFi to TradFi, because if you see as of today, everyone wants to have like SpaceX shares. Even before IPO, they can pay like crazy money out of it without even understanding what will be like the target PE out of that. Does it make sense? I don't know, but some culture and some speculative trade is needed everywhere.
You've all been very early as co-founders or super mega OGs in the sector, so you've seen what it means to raise, you've seen what it means to run a company from 0 to 1, and I've seen many companies go from 0 to 1. If you all had to give a suggestion to a neo-founder of a DeFi project in how to succeed tomorrow, like one great advice that they will remember in 1 year, as was amazing to hear it because helped them survive and help their project to actually scale, what will you give them? One suggestion each.
Just don't quit. Don't quit and adapt. The market changes. If you're so stuck in your own reality, that's not the world's reality. You're building a product for other people to use. It's not for your own ego. So yeah, don't quit and adapt.
I would say don't just copy success story. I mean, you're not gonna be successful just by copying the new Hyperliquid or the new whatever. I mean, you need to innovate. You need to find something new, a new product market fit. Otherwise, yeah, it's gonna be very tough.
Yeah, always build something that someone needs to use it, basically. So it's like, yeah, build it, not for the purpose of building it, as Connor was saying. Do it because you know that there is people who need it. And try always to iterate and pursue your, let me say, goal alongside that, and pivot and don't be scared about market conditions.
Yeah, no, I agree with all of them. Definitely with Connor, like, you know, we were about to quit, we didn't, and it turned out on the positive. So definitely agree with that.
Same here.
Yeah, like this, you know, every success story, like there is a moment that you're like, should we quit? And that's where, you know, things happen. But back to that, when we were about to quit, it was the time that we had no money, 3 months of runaway. Most of the people left, or we had them to, you know, go because of like not having runaway. And that's the time where even as a builder, you start to be extremely pragmatic. It's like, I only have 3 months. After that, it's over. So the decision that you make, everything that you make is like absolutely pragmatic. So the other thing to me, if you start today, be pragmatic. Like, you don't need to fundraise millions out there. You need to build an edge. That's way more important. You need to be smart on the way you're doing. You need to be, like, again, flexible, lean. So yeah, I guess like, don't quit. But even before that, make sure you have an edge. Make sure you build into the edge and be pragmatic about it.
I think you said something really interesting about how much the money to raise. So we've seen some people in the space raise like 50 mil, 60 mil, haven't released a product in 5-6 years because they feel comfy. They don't feel the need to release, or they're not creating artificial pressure on themselves, right?
Yeah. Also to add to that, like, I don't know about you, and I would love to hear that, but like when you start, you have an idea, right? And you raise for that idea.
Yeah.
And then you start going to the market and you start to talk to market makers, you start to talk, you know, to the users and so on, and that idea is start to evolve. And your edge start to build over there. So you're basically raising for something that might be completely opposite for what you ended up doing. So even raising so much money because you think you need them for that, in reality you might not even need them, right?
I completely agree. Ironically, we started as options. Options and asset management that pivoted into social trading, the DeFi super app, and now infra. You know, it's just change over time.
Yes, if fundraisers have the same problem of the token. If equity becomes the product, then the real product is not going to be built as well. So yeah, if you focus too much of raising 50 million, then become good at doing that and not just serving your users.
And I do believe that VC made like some very bad decision in the past in crypto world because they were just jumping into the hottest narrative without even thinking what was their thesis. So if someone was successful on that, everyone was copycatting and everyone was jumping there and putting like a lot of investment. That much amount of fundraising that then you say like, I raised that much money that my product will never do this kind of amount of money. How can I handle it? So I think this is something that, as you were saying before, don't copycat the others, because maybe there is just one successful story on one specific business, and then you can have also like 300 million raising, but maybe if you are not convinced on what you are doing, then you just enjoy the money and then it's over.
As we are having in the other room at ETHMilan an entire institutional day, and it's clear that in the US and in Europe, this is one of the narratives that is growing. How can DeFi, let's say, survive without getting absorbed or acquired entirely from the institutions and centralized exchanges that are becoming way more the center of whatever is left in the industry?
If I may start, it's thanks to these guys, which are like building things which make like even for institutional, like are willing to use it because it's more convenient for them. They just look at how much money I can save, how much more money I can have. And so builders are the ones that are bringing institutional and are creating a new need for them. So it's not like we are going to get cannibalized by them, but we are welcoming them to let them understand that even finance can be innovated.
Yeah, I mean, just add on that, I think a lot of these people want compliance, they want ease of access, right? If they need to spend 3-4 years of building a POC to even test something, right? Whereas if they integrate Enso, they can get all of this compliance, regulation, and access to over 220 on-chain protocols kind of overnight, right? To kind of answer your question directly, I think we need to have a bit more of a backbone. Like, it feels like we're all groveling and begging the institutions to work with them. And it's like, yeah, we built this industry, you didn't, so we can choose how we work with you. Whereas all these protocols and projects are like, yeah, institutions, please, 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 let me work with you. And it's like, have a bit of a backbone, you know? The industry's changed and evolved so much. Into how to do this is, these are our philosophies, this is how we like to build, this is our community, and you actually have to adapt to us as well. There needs to be some middle ground. Whereas right now, it just feels like, hey, we'll change everything we've done for 10, 15 years, all for these random guys in suits that have never been around before, right? And it's like, yeah, let's find a middle ground, not us do everything for them. So yeah, again, have a bit of a backbone.
I think there is this temptation to focus on working with institutions because it maybe feels easier to work with one big guy rather than trying to have distribution with 1 million retail. But yeah, I think like the edge of this industry is in serving people that the TradFi market was not able to serve, and those people are not the institution. The institution can already very well operate in TradFi. So yeah, it's tempting to say, yeah, I just will work with the institution, so I need to just sell to a couple of big guys and I'm done. But yeah, in this way, then it's hard to maintain an edge long term.
And you only build a product for them at the end of the day. It's all customized for each person, right? You're not building a product that can be used by many different people. If you're working with UBS or Credit Suisse, well, they don't exist anymore. Ironically, TradFi doesn't exist. You will build customized solutions just for them. They can't be replicated that much for everyone else.
Yeah. In my opinion, they should adapt to what has been built so far.
Spot on.
It's difficult, but it's TradFi that should evolve to go into DeFi, and not just DeFi get focusing on attracting institution. And this is how we should innovate the entire financial ecosystem.
We are at our 5 minutes left, so I would like to give you free mic to say whatever you feel about DeFi. There's so many things to say. Come up with one. Any one of you can start.
I mean, you're killing it. You should start.
Hyperliquid. No, I'm joking. Mostly joking. No, I mean, there are so many, so I think back to all we said now, like the thing about DeFi is it is still a massive playground. We are all here still playing. I love it now way more than it used to be because right now there is no bullshit, or the bullshit is like, it's very easy to spot. There's still a lot of things going wrong, but at least, you know, the purely bullshit is like out of the game. So I think this is the best time. I think even in the way of like the institutional access, I mean, the fact that we are sitting with those institutions and trying to get them to use, you know, the infrastructure that we build in is crazy. Like a few years ago, I wouldn't even think about this. Obviously, we need to, now is critical time to do it properly because it's everything. Like we can do it in the bad way or in a good way. We can take, you know, shortcuts, we can take trade-off, we can compromise. Like, so I think right now is the most critical because we are legit, we're building in the legit way, we're starting to get the institutions on board. We can build the DeFi for institution, which should be DeFi and not TradFi with DeFi distribution, which is a different thing. So to me, it's like it is the best time to build into the space, but it's also the most critical for the future ahead. And back to, you know, even the question that you made before, the reason why we have institutions now is because the retailers are not around anymore. They degen too much. They finish the money. That's the reality. Like now they're doing IPOs. Now they're buying Cerebras, they're buying, you know, SpaceX. They don't get into crypto because they go burned too often. So The thing is, we need to make sure that we don't burn people. We need to make sure that the space is accessible, welcoming, and we not just use them as excess liquidity. And that's why we have institutions now, because we finished the other liquidity.
I agree with you. Buy hype, right? Buy hype and use Rysk.
Liquid. That's it.
Yeah, hyperliquid. That's what we all actually dreamed of for this space. I think what you said.
No financial advice.
I can say financial advice. It's all-time high, right? I think you said something really interesting, which is, hey, we can still innovate. It feels like there's still innovation happening, but not as a parabolic scale that it was happening maybe 2-3 years ago in DeFi. DeFi summer was wild, the amount of stuff that was coming out. And again, we can choose to work with the institutions, but we can still choose to innovate, right? We can. It doesn't need to be another lending protocol. It doesn't need to be X, Y, and Z. We can try new things because it's a complete playground. Like, people will use it in this industry. So yeah, just my closing thoughts is really, let's still innovate and let's choose to work with these people, not because we're forced to work with them, and they should adapt. And so will we, but we should not lose our culture of innovating and trying to change the world or change the space, right? Which I feel in the last couple of months with these institutions, it's kind of decreasing, right? Yeah.
It's good. I mean, I do like the fact that this is the first time where like institutions are looking at you and not vice versa. So basically DeFi bring like a new movement of people building financial instrument, and then institutional came and say, oh, I'm curious about it. I want to know more. I do believe that next year we are not going to call it decentralized finance, but maybe on-chain finance, because nothing is decentralized. I mean, it's a bold statement, I know. But if you look at it, in the end, there is not a bank behind the scene doing that, but there is another guy with a wallet signing the transaction. So decentralization is it didn't find the right, like, it was a philosophical concept in the end, IMM and these kind of things. And now it's evolved on, okay, there are hidden middle layers that are acting around every kind of protocol and thing, which is not any longer explaining this as a decentralized stuff.
It's all market makers in the background, right?
It's not just market makers, but there are also people running things, I mean, where is the governance? Where is the evolution of the governance? We talked a lot about DAO, decentralized autonomy, the organization, all these kind of things. It vanished. No one is talking any longer about it. So even into a decentralized protocol, it's not decentralized because there is someone taking all the decision and having the governance out of it.
Yeah, in general, you just need to have enough decentralization theater to trick the regulator not to put you to do KYC. So, I mean, actually that's the product. I mean, permissionless non-KYC financial products. And yeah, the decentralization is, for most people, is a tool, not the end. So
I think it was also about convenience, right? Like, if you need to do, it's even like using on-chain, if you need to go do 20 different transactions manually, if it's fully decentralized, or just one if it's centralized, people are going to use the convenience method, right? Yeah.
That's how Bitfinex and all the checks succeeded, because they were even way more efficient than a decentralized solution. And now, basically, I mean, it's not any longer a difference between like CeFi, DeFi, because if you do a swap on Uniswap, in the end you are having like the same centralization you're having on a centralized exchange, probably.
Yeah, but still, then all the market maker on decentralized venue, they hedge on centralized venue, so it's kind of the same flow. So yeah. But I think this is also maybe an interesting moment for the industry, because a few years ago crypto was like the cool industry where you come to and you make money just because everything is going well. So you have all these people that will come and will build in crypto just to ride the wave, and just because they're building here, they will become rich. And also same for the VC allocating. Now that the industry became AI, so that people that are left here are more focused on building stuff that matters rather than just build here because just the positioning is good to make money. So I think the stuff that is going to come out in the coming years is going to be much higher quality than what we saw in the past.
Yeah. To add on the decentralization, right? I agree that decentralization means everything and nothing at the same time. But one thing that one example that I love about this is hyperliquid, right? We might agree. Did I say hyperliquid? No, but like hyperliquid, we might agree or not that it's like not fully decentralized or whatever. But one thing that they've done is when the attack a couple of months ago about, Jelly Jelly on the HLP app, and we were on Twitter looking at it live. Like everyone, without any special infrastructure, without any special access, we saw exactly what happened. We saw the attack, we saw who were the attacker, we saw like what happened. People were like commenting in real time about all this attack. Hyperliquid made a decision back then that it was like, okay, we want to protect our users, so they somehow made a centralized act to solve the problem. If you think about a different example, which is Binance on 1010, we still don't know what happened. Like no one knows what happened on 1010. Like liquidity completely disappeared, massive liquidations and so on, and still no one knows what happened that day. So from two very similar products, one is the decentralized version, even though again, we might not be fully decentralized, but at least it has the transparency, it has the permission that you can see anything happening. We know what happened. We know the decision that we made. Now, as a user, I'm using Hyperliquid knowing that they can do that or they cannot do the other thing. If I'm using Binance, I don't know what's going to happen in the back. So I don't think the real value at this point is about decentralization, but like the visibility, the permission, and so on. It is a very big deal, and as a user, I love it.
And this is on-chain, not decentralization.
It is on-chain, yeah.
So it will be
It's on-chain finance. On-chain finance, open
You have
finance.
all the transparency needed because it's on-chain instead of off-chain, not because it's decentralized or centralized. You don't care. I mean,
Yeah, the value proposition is the transparency, not the decentralization. I mean, decentralization is always kind of a mean to certain end, so it can be to avoid the custody risk or to have transparency or to be permissionless. The decentralization is never the goal. I mean, no one cares. People want decentralization for something. So.
Okay, thank you very much to our panelists. It was a great talk on DeFi. Let's continue to bring our friends on chain and to try all the DeFi protocols that you think they should keep trying. Let's keep pushing DeFi for the next generation. Thank you.
Let's do it.
Thank you.
Thank you.
Hyperliquid.
Hyperliquid. Bye, hype. Bye, hype.